Hello and welcome to the Stage Analysis Members Weekend video. This is part 2 of the weekend video as I ran through the indexes, the sectors, industry groups, market breadth charts on yesterday's video. So on today's video, I'm going to do a group focus on the gold and silver miners to begin with, before going through some of the week's stage 2 breakouts on the weekly charts, and then there were some of the weekend watchlist stocks as well of interest. So let's begin with the feature on the gold and silver stocks, as obviously gold is pulled back following its stage 2 breakout, which you can either say was 4 weeks ago or around 6 weeks ago, depending on which level you're taking for the breakout level. So either or, but obviously the ultimate breakout through major area of resistance was around 4 weeks ago. So we've pulled back into that level now on the weekly chart here, which you can see. So this is the Gld chart. You can use obviously whatever you want for this. There's a bunch of other ETFs. Obviously spot gold itself, it's not a huge amount of difference between them though. So I generally use this as it's obviously one of the most liquid ETFs to trade with. So at the moment we're in what we call the backup range. So it could potentially be an upthrust, as obviously the stage 2 didn't make a huge amount of progress. So it did have 3 weeks or 2 weeks of moving up, but that second week obviously squatted quite heavily. So an 8% move from the breakout level there, or from the lower level, it moved around 10% before pulling back in. But if we zoom in on the daily chart here, so if we just drop down to a daily chart, you can see the backup range here. I'll put on the ATR levels and log scale as well on this. So you can see the pullback into the 21-day moving average has undercut that a little bit and touched a -1 ATR level, and before consolidating and then pulling back up again. So we're going sideways at the moment in the backup range. So what we're looking for is for this to hold above this prior base. So the entire stage 1 base here, it was a big stage 1 base that this formed. So went on for a good 40 weeks there. So 3/4 of the year before actually attempting the stage 2 breakout here, and obviously backed up by multiple gold mining stocks actually breaking out into stage 2 at the same time. So obviously this is considered the potential backup range at the moment, which in the stage analysis method is potentially the secondary entry point. As when you use Stan Weinstein's stage analysis method, there's 2 entry points on the investor method, which is actually at the stage 2 breakout point. As I said, either or, whichever one you're taking there as the actual level, and then on the backup level, you then take a further 50% position on the secondary entry point. But there's a little bit of looseness around what the actual backup entry point is. So as obviously it wasn't clearly defined in the book, it's just a pullback towards the breakout level before then moving higher again. So there's many ways to approach it, but the best way I've found to approach it is to use a multi-time frame approach. So obviously first dropping down to your daily time frame, you check that the backup move, the initial pullback, is on lower volume than we've seen on the breakout move. So we obviously had stronger volume on the breakout move, then volume has contracted on the pullback. You don't want to see any heavy significant bars on the pullback either, and you want to see it hold above the prior range. So at the moment, as we can see, we're holding above the prior range, so it is potentially forming the backup, and we didn't have any significant bars on the way back. So first part of that is obviously met, and then another way you can approach it is to actually continue to drop down the time frames, and then to use stage analysis on a lower time frame. So for example, the 2-hour chart here, you can see a prior stage 2 advance here, which was actually the breakout into the actual weekly stage 2 move, and then the pullback into here. We had a minor stage 4, and then it started to form up, and we're now forming up in a stage 1 base here on the intraday chart. So you could take it down another level as well to the 1 hour or the 30-minute chart, but basically this lower area here gives you an area to focus on a stage 1 base structure on the intraday chart, to then look for a new stage 2 breakout. And then if you don't get a new stage 2 breakout, so for example, if we didn't get, obviously we've got a breakout level here, so if we didn't get a strong volume move on heavy volume through here, for example, then potentially we would be looking for this to go the other way still. So at the moment, obviously it could continue to base for a while, obviously like a normal stage one base that you would see, but obviously on the backup, sometimes the move, a bit like you see in cup and handles, etc., can be a little bit shorter at times. So looking for this to, if I drop down again to the 30-minute time frame on here, you can see the stage one base that's been forming on this a bit more clearly. So if I quickly annotate this, you can see the bulk of the range here, the initial range, it's actually popped above, not really much in the way of volume there, and it's still underneath this area of liquidity. So we've got a secondary level here to watch. So as I said, we'd be looking for an actual breakout bar, strong breakout bar on heavy relative volume, same as you'd be looking for on a weekly stage 2 breakout, but this is obviously on an intraday time frame. So obviously a viable gap up, same kind of thing. Obviously, as long as it moved into stage 2. So you've got obviously a stage 4 decline, making a stage 1 base, and then potentially moving out into stage 2. So that's another way to approach the backup entry, as if it doesn't obviously meet that, if it doesn't break out and it falls back into the range again, you actually start to see it pull back into the range. It starts to break some minor levels in here. Obviously, the volume continues to be low. You start to move down in the range, then potentially it's a failed breakout attempt, or it hasn't even made the breakout attempt, and then you just continue on stage 1, and it could obviously ultimately break down into stage 4 at the bottom of the range again and continue back down. So obviously that's on an intraday time frame. So if you go back up to your daily, if it did that, it would obviously then turn this into an up thrust and a last point of supply. So if we go back to our weekly chart here, so this stage 2 breakout would then be a failed breakout, which would then form as an up thrust, and then you have a last point of supply, and then this would then become, so obviously if it started to go that way, start to break through there, that's a potential obviously then short entry point around this kind of area here for the downside, as that's a failed breakout at that point. So at the moment, obviously treating it as a potential backup from an accumulation stage 1 base, obviously a big stage 1 base, and obviously with the strength that we've seen in the gold miners, then obviously it's backing up at the moment in terms of giving additional confirmation that it has been an accumulation range, and we're moving on out into stage 2. But anything can happen, so just be aware if it does start to falter, and obviously the laggards in the market start to rally, then obviously this could start to come off a bit. So it could go either way still in that regard, but obviously in the stage analysis method, we're treating this as potentially around the secondary entry point, but now looking for that trigger for the entry. If we look at silver, it's not had quite the same kind of base that we've seen in gold. So the stage 1 base has been much shorter. We had that the stage 2 breakout in gold actually was just a little up thrust action in silver at the moment at the top of the stage 1 base. So we've got the stage 1 base forming here. You can see the 10-week moving average has moved back above the 30-week moving average here. So, and it has had a change of behavior with the break out of the downtrend channel, but it hasn't made a huge amount of progress yet. But there are a number of silver stocks in a similar position, so this could obviously break out into stage 2 if it can follow through to the upside here. So if we get a move to the upside through near-term pivots again, starts to make progress again, you'd want to see strong relative volume if it does do that kind of thing. So let's have a look at some of the individual stocks. First, starting with the ETF that covers the bulk of it's mainly US miners in the GDX. So you can see this broke out of its stage 1 base here, and had a minor base from this little structure down here. So, and obviously the broader structure, it's still just testing at the top of this broader structure at the moment. So it did undercut that. So you could still argue that this hasn't yet broken out into stage 2, but you can see the 10-week moving average is above the 30-week moving average here. We've had some spring type action in the bottom of the base here, and it has obviously tested the top of the range. So potential minor sign of strength. Obviously this could still back up a little bit. So we could be looking for this kind of action up to the upside, but at the moment obviously this is looking promising in terms of it's actually made it back quite significantly back above the 30-week moving average, and we're back above the relative strength line here. So the blue line here is the 52-week moving average of the ETF versus the S&P 500. So this is what we call the zero line. So this was based on the Mansfield relative strength indicator. So that was what was called the zero line in that, which was a flattened version of this. So I find this more useful than the flattened version, as obviously the angle of the moving average gives you an additional data point to look at. So you want to see that either flattening or turning up. So at the moment we're above a flattening, slightly turning up moving average here, so with relative strength outperforming versus the S&P 500. Look at some of the individual stocks. So these are the stocks that have come up in the stage analysis watch list over the last month. So I do the watch list every day for the members. So these are, I'm not sure if it's an exhaustive list. I ran through quickly from the last 3 to 4 weeks of watch list scans of what had come up. So these are the bulk of the ones that have come up in the last month. Basically, you can see from the SCTR score here that the vast majority of them are above the 80 level. So, and around half of them are above the 90 level. So really strong relative strength in the gold mining and silver mining areas. We've got some mixed ones in here as well, like FCX, which does copper, as well as gold, silver, and various other metals as well. But you can see the focus is generally on the strong RS stocks. I'm not looking for laggard gold stocks at the moment or laggard silver stocks. We're looking for strong RS stocks, obviously above their moving averages and starting to shape up, potentially moving out into stage 2 or already in early stage 2 and starting to consolidate. So we put it in order of relative strength here. So GFI is our number 1 at the moment. You can see here, if I put the ATR candles on here, or ATR bands, the Kelton channels. So you can see in the last 7 weeks here, so since this swing low around here, this has moved around 75%, and then the pullback has only been around 12 to 13% there. So you can see the entire run has been mostly above this 1 ATR level here. So, and it's just dipped under that a little bit on Friday. So starting to make a little bit of a near-term base on the intraday. So if we drop down to the intraday chart here, you can see we've got this intraday stage 2 advance, and we're in a stage 3 at the moment on the intraday here. So we'll quickly drop this on it. You can see the structure that's forming at the moment. So you've got an initial buying climax, an automatic reaction, secondary test, and some testing in phase B. And then so we're potentially in either the latter part of phase B, or we could be forming in phase C, but we haven't had any kind of event yet to determine that yet. So at the moment, still got it in phase B, but you can see the lowering of the volume here. The moving average is dipping down here, so the volume has been drying up as we've been going sideways. So reasonably constructive in that regard. We've got the volume point of control in here, which is just slightly under at the moment. We're sitting around, so we're looking for this to start to move back to the upside here through some near-term pivots. So I would be looking for a move back through this 16 level here and up through this kind of area. Again, you'd want to see the volume expand on any kind of breakout move like that. So that's that one for a potential continuation. If we look at it on the weekly chart, so as I said, this is one of the strongest gold stocks at the moment. If we look at obviously the ultimate range, the big range, which was the full stage 3 range here, so that was quite a large range, but then we had some smaller levels which it busted out through in the last few months. So it's now forming above, so moved out back into stage 2 around this area here. So it's been out, you can see it's been massively outperforming the S&P 500, and the pullback still a long way above its zero line here. So looking for this to continue to form up in the backup range. As I said, we want to see it continue to hold this tight little pattern that it's been forming here. So sort of mid, not a high tight flag, but a mid flag in terms of it's only run 75%, but it's pulled back only around 12%. So that one, GFI, looking strong. Closed for Harmony Gold, another one that's been fairly strong. It's a bit of a smaller name here, down only at $5, but you can see the lower base structure that had been forming in this one. Again, if I put the ATR candles on, you'll be able to see this a little bit better. So we're looking for on this one is obviously the bulk of the action there. So it did undercut, had a shakeout move early down here, but obviously you can see the bulk of the structure here. We had the breakout move, and now it's forming in its own little backup range here. So we need this one to continue to hold and pull back above the near-term pivots in here. So looking for a stage 2 continuation. Again, if I drop down onto the intraday on this one, similar sort of pattern that we've seen in GFI. We had the stage 2 advance on the intraday, and then we moved into stage 3 here. So we're looking for a continuation breakout to new highs on this one. So you can see, see a level through this kind of area here. So around the 5.4 level on this one at the moment. But again, you can see that no real evidence of an increase of supply here. So the volume has been drying up. So looking for a strong move on this one through the top of the range, breakout on heavy volume. So you want to see volume expand on any kind of breakout move. All right, again, we go back. FCX is a different one because this is a mixed miner. So this is in the non-ferrous metals group because of that, but it does do copper, gold, and silver, and a bunch of other metals, I believe. So this one's come up in the watch list multiple times over the last 6 months or so. See the massive, if we go to the weekly chart here, the massive base that had been forming. So we go from the original base structure, see it undercut it a little bit there. So if we take you've also got a lower structure within here. And let's do it from that. Let's get rid of that one. The bigger structure is good enough. So you can see that it's started to move out, undercut again, and has continued to grind up higher. So again, it's holding its own little backup range here. Could still be an up thrust, obviously, but it's in case it falls back in, you obviously don't know that until that happens. So we drop down to the daily time frame on this. You can see it's making new highs, but it's making new highs on below average volume at the moment, and relative strength is not following at the moment. So a little bit more concerning on that one, that it's not following suit. But if we drop down to the intraday, you can see it's making progress at least, and there's not a huge amount of supply coming in by any means, and the volume has been declining. So looking for this one to make a continuation or 2 new highs. Newmont is another one I wanted to highlight in the gold miners, of obviously strong relative strength in the near term. Again, if I put the ATR candles on here, you can see obviously it blew out of its 3 ATR level here, so got a little bit extended in the short term. So we had a near term buying climax. So in the Wyckoff method, you mark that as a BC, and then we've had an automatic reaction and then a potential secondary test here. So quickly draw a little base structure here. We've got a little bit of sideways ranging going on at the moment. So buying climax, automatic reaction, secondary test. So we're looking for this one to start to form up, whether it forms up in a VCP, so tightens up in here a little bit more before obviously breaking out to new highs, or obviously just moving straight on through, making a breakout to new highs before, and the 21-day obviously continuing on with that. So, but at the moment, this one is interesting as it's dividend stocks. I highlighted on yesterday's video that the S&P SPYD, which is a dividend, the dividend stocks in the S&P 500 ETF, is actually breaking out to new highs. So NEM is the only gold miner that was in that ETF. So as it's got a 2.79% yield, I believe, as well. So obviously a good dividend yield, and obviously a big breakout on this one from obviously its major stage 3 range that it was in for a long time there, for a good couple of years. So breaking out stage 2 to new highs here, obviously in the backup range at the moment and holding. So looking for that one to make a continuation. Silver stocks. So there's a few silver stocks here. So of the strongest of the silver stocks is SSRM. It's obviously a gold miner as well. I think it used to be called Silver Resources, something like that years ago. But basically this one this one's showing the strongest RS of the silver miners, as I think it's a gold producer as well. So I think it owns the biggest silver mine in Argentina potentially. You have to check that fact. I might have made that up, but I'm pretty sure on that one. So this has obviously had a strong move since the start of February here. So since this low on the 28th of January, it's moved up around 43% there, and the pullback has only been around 10%. So it's only pulled back around 25%, a quarter of obviously the initial swing. So showing some really good relative strength. We've got similar sort of price action than what we're seeing on all the other ones. So we're near-term buying climax, automatic reaction, and the secondary test here. So we've got a near-term phase A of a potential base structure forming. So this could continue to base run sideways, but ideally we'd want to see it tighten up in here. So we want to see this continue to tighten up, and then obviously ultimately break out, and we want to see the ideally hold above this 21-day moving average and continue to run higher there. So looking for that kind of action on this, but you might not get it. This could also be a near-term top. So you've got this kind of structure here. So as I said, we've got this kind of action. So if this is a up thrust secondary test, obviously it could start to roll down here and make a lower high, and then obviously continue on to the downside there. So obviously don't rule that kind of action out. You never know. Once you start to get a little double top type move here, you never know which way it's going to go and whether that's actually going to be the ultimate top or not. But obviously it is a potential change of character, or change. We've had a change of behavior, potential change of character, but it isn't quite there yet, because obviously, like I said, we've had this strong move and we've only pulled back a quarter of this initial strong move. So it's showing good relative strength at the moment. So obviously the initial bias is always in the same direction as the trend. So our initial thoughts on this is a reaccumulation range, but obviously it doesn't mean it can't chop around within the range for a while. So this one, if we look at it on the weekly chart, you see it actually made a stage 2 breakout. So leading the silver miners in terms of all the other silver miners are still in stage 1, I believe. So you can see we've obviously got a clear stage 2 breakout on this one. Obviously it was on strong relative volume on the breakout week here. So if I weeks up around these couple of weeks here. So volume was reasonably strong on those weeks, and continued on into the following weeks. So we had a few more weeks of strength there, and then the pullback week has been on only around half of that volume. So this one in early stage 2, stronger volume and then contracting volume on the pullback. So looking promising so far. So again, we drop down to the intraday time frame. What are we looking at here? Potential VCP, maybe. You can see the stage 1 base here. So we had stage 1 move here, breaking out into stage 2. Then we formed up in a stage 3 range up here. So we'll take it from the change of behavior move here. So you can see the kind of VCP type pattern that we've got forming here on this one. So looking for a move, obviously a breakout move to new highs, and we'd want to see obviously strong relative volume on that, ideally the biggest volume that we've seen. So that's SSRM. Couple more silver miners to have a look at in here. So we look down the list, you can see SILV, HL, PAS, AG, WPM, EXG. So let's quickly run through a couple of these. So you can see SILV, as I was saying, with the actual silver chart itself, we're still in a stage 1 base on this one. This one's quite a big stage 1 base. So looking for a stage 2 breakout on strong relative volume on this one. You'd be looking for obviously your relative strength to break out to new highs at the same time as that. So same sort of thing with Hecla Mining, still in stage 1 here. So just coming out of a stage 4, moving above the 30-week moving average here. The 10 weeks just started to move above. So this is forming a high stage 1 base at the moment. So at the moment, the top of the range is this area up here. So top of the pivot. Obviously, your bottom of your range is down here at the moment. So looking for this one to either continue to tighten up in here and potentially then make a make a break to the upside, and that on strong relative volume, ideally the strongest relative volume you've seen. And again, looking for RS line to continue to improve. PAAS is Pan American Silver, so you can see the 200-day moving average here. We've just started to move back above that, and the 21 days started to move above it, but the 50-day is still below that. So the short-term moving averages are not in the right order yet, as we need to see the 50-day above the 200-day on this. So that means this one's got near-term resistance to deal with. So if we zoom out to the weekly chart, you see this big resistance range from the prior stage 3 here. So you've got this stage 3 base here, so this turns into obviously a big area of resistance, just starting to come back into that sort of resistance zone there. So just moving into stage 1 on this one again, so looking for this one to start to make some progress to the upside, but again it's only just starting to break above its near term the zero line here, so relative strength only just starting to turn up. So we're looking for this one to continue to improve, but obviously in the near term here, you can see if we drop down to the 2-hour time frame here, it's been a little bit sloppy, but again VCP type action, so same sort of action that we've been seeing in the bulk of them. Obviously got this sort of VCP sort of move here, not so good in this one, but it has tightened up in these last 3 swings here. So again, looking for a break to the upside on this one on stronger relative volume, ideally the strongest relative volume you've seen. So this one, AG, again you can see the base structure here. So if we just quickly draw the base structure, it's still within this base structure after undercutting. So we had some spring type action down here, so spring and a sort of test type action. The spring didn't come back into the range low, so not the best. It's a bit of a shakeout move there. So another test area up here where it pulled back to the 50-day moving average and the 21-day and held, and a further test. Now obviously it's consolidating at the top of the range in here. So again, if we drop down, we'll move out to the higher time frame on this one first, so you can see kind of structure we're dealing with here. So you can see the stage 1 range starting to develop. We need to see this obviously make a strong breakout move to the upside on strong relative volume like so, in order to move in stage 2. So again, we drop down to intraday charts on this one. The 2-hour chart here, we've got a little tight move in here. So at the moment, just potentially forming into late stage 2 or early stage 3 on this one. So you can see the kind of little structure we've got in here. So again, looking for break to the upside, strong relative volume. WPM, the other silver miner that was been looking at recently. So again, we've got this got ultimate low down here. So your original selling climax into automatic rally. So this is our sort of broader structure, but you've obviously got a smaller structure within here, which it's started to break out of, but met resistance at the top of the range here. So again, looking for this to make that break to the upside on expanding volume, and for the same as we've said on the others, we want to see relative strength start to outperform. It starts to do that again. Drop down to the lower time frame, stage 2 into stage 3. You've got the buying climax into the automatic reaction, secondary test, shakeout in phase B, and then it started to form up. So you can see higher lows starting to develop in here. And then so we're looking for this to start to move through this kind of area here. So big volume move, ideally through there, potentially for a breakout into stage 2 on this one on the weekly chart. And then Endeavour Silver, a little bit more volatile in the near term here. You can see it's pulled back. It's had a good run since the low, 28th of January there. So 68% move, and then it pulled back in around 20%. So around a third-ish. And you can see that it's been forming up around the 21-day moving average here and holding above the 200-day. But the 50-day moving average, again, is still below the 200-day moving average. So we need to start to see this 50-day needs to improve above the 200-day moving average here. So let me undo that. So you need to see the 50-day start to improve and the 200-day start to turn up, and the 21-day to. So start to get them back in the right order. We need to, and then obviously start to break through this near-term range in here. A little bit of a pivot breakthrough there, potentially, when the RS line turning up and starting to make some new highs. Again, if we scale out on this one to the weekly chart, you can see the start of the stage 1 base here. We've got obviously a broader downtrend line I can see immediately on that one. So if you look at that, so you've got our downtrending structure, which is starting to come off of, and we've had a little bit of a change of behavior here. So again, if we look at this from a structural point of view, we've started to build a base here. We've had obviously a shakeout type move here, and we've pulled back out of this downtrending channel. We're starting to hold up in this area of the base, so need to see this continue to form in here and then potentially start to make a break to the upside on stronger relative volume. Again, relative strength starting to outperform at that point. So that's what we're looking for there. And I won't go into all of the rest of them. You can see the names here. So again, this is ordered by relative strength. This is the 1 week change that we've seen in these. So if we go to 1 month change here, you can see vast majority of them had reasonably good moves over the last month, last 3 months. Obviously, quite a lot of them, 49% in gold fields here. So this is our top performer. So obviously on our 1 week range here, didn't see much going in GFI. It was a flat week for it, but as I showed earlier, it's consolidating and it is our strongest of the gold stocks at the moment I'm looking at. So there's obviously plenty of other gold stocks you can do. Obviously, run your scans. There's more than 100 or so of them, but these are the ones that have been coming up in the watch list. And with the stage analysis watch list, I generally only focus on strong relative strength stocks. I'm not looking at weak stocks unless they're really starting to come up and starting to move into the latest part of stage 1 or into stage 2. So at the moment, even though some of these like silver stocks are in stage 1 still, you can see their relative strength versus the S&P 500 is very good. So they're showing potential to move into stage 2. So that's it for the gold section. So right, let's move on to what we're going to do. Get rid of that. Let's move on to some of this week's stage 2 breakout / continuation breakouts. So I posted a bunch of these on the public Twitter feed over the weekend. So HPQ is a good example of a potential continuation breakout. So I was highlighting this one in the watch list throughout October, November time on this right side of the base structure here as it was starting to form this cup type pattern. Obviously, it broke out with a stage 2 breakout to new highs, and then I've been quiet in the watch list since then. It hasn't been highlighted since the breakout point at that point. But again, this weekend now starting to come back into focus again as we've got on the relative strength versus the S&P 500 moving to new highs, and it made a stage 2 continuation breakout to new highs here. So if we have a quick look at it on the daily chart, you can see it's a little bit extended on the daily. So we've got our little structure forming in here. So breaking some near-term levels. So want to see a sign of strength in this one with a little bit of continuation before obviously holding up, tightening up VCP type thing, and obviously moving off to new highs. Obviously that's a potential ideal. If it, on the other hand, starts to falter, if we start to see an immediate move back into the range, starts to make lower highs, starts to break back below the 21-day moving average there, then obviously it starts to move to a short at that point, as potentially that's then an upthrust, a failed breakout attempt, and upthrust, and then moving back there. So that's a short entry point at that point in the Wyckoff method. PANW, so another one that I've been looking at. I did attempt to trade the initial break here, but obviously it was a little bit too volatile on the pullback, so I didn't actually get back into that one. So, but it's looking good still. Relative strength at 93 on the SCTR score. So this is I looked it up earlier. I scanned the technology sector. So there's around 900 plus stocks in the technology sector, and this is in the top 20 of those in terms of relative strength. So breaking out to stage 2 breakout to new highs, expanding volume on the breakout move. Not excessive volume, it's only a little bit above average, but you can see RS at new highs as well. So PANW is looking good in terms of one of the leading technology stocks at the moment. RADA. This is in the industrials, one of the defense names. So this made a stage 2 breakout move this week on more than 2 times average volume. So it did have an earlier breakout gap move in the range. So it's been highlighted in the watch list since the lower point down here. I think I highlighted it at this break down here and through the range. So this is probably the 3rd or the 4th time it's been highlighted in the last month or so. But obviously starting to break out to stage 2, break out to new highs here. It'll probably need to consolidate now. So obviously it's had a big move in the last week, but you can see this is what we call a significant bar now. So big volume, big bar. So ideally, we don't want to see it start to fall back below this bar here. So this bar potentially is your new range on this one. So ideally, don't want to see it fall back below sort of halfway point in there, or obviously ideally not below the bottom of the range. If it starts to trade back below there, then obviously could potentially be a failed move. Again, on the weekly chart, up thrust that then has failed and fallen back into the range. So again, if we go back to the weekly chart here, if we start to see that kind of action, it starts to come back in, starts to undercut, then obviously that would be a failure, and that would be a potential short entry point at that point. So at the moment, what we're looking for is for this to tighten up, hold above the top of the prior range here. So tighten up in this kind of area before making a potential, obviously tightening up before making a potential continuation breakout. Right. CIVI. So this one again, another stage 2 continuation breakout. Volume has been expanding of late, so it's more than the average volume, but obviously not 2 times the average volume. It's not standout volume compared to the rest of the chart. You see the relative strength has been moving to new highs in advance of the price action low. So this big bar here, you can see the RS had already made a new high. So this one's showing really good relative strength again. So 97.5 on the SCTR score. And obviously breaking out of this stage 3 range back into stage 2 continuation breakout here. If we just quickly drop down onto the daily, you can see the structure here. So you've got a little bit of spring type action on here. So let's see, let's mark the range. So you've got obviously a spring in here, obviously last point of support, and a breakout to new highs. So this is what we call a sign of strength. So in the Wyckoff method, obviously, which you can use as a combined method with stage analysis. Obviously, stage analysis just telling you where you are in the actual price cycle overall, whereas Wyckoff deals with the base structures and breaks it down into different phases within the bases. So within the base structure, we've got our initial buying climax, automatic reaction, secondary test, some testing in phase B. We've got our shakeout move here, which forms as a spring. So this is our early entry point around here in obviously the Wyckoff type method, and obviously in the backup area in here within the base structure, so into the last point of support, and then breaking higher here, and then break out actual entry points as well. So again, we're looking for this to either continue sign of strength and then pull back in, but not obviously hold back above the range here before obviously making a continuation breakout to new highs. Ideally some VCP action there, so ideally it would move and tighten and break, but obviously could quite easily pull back into the range. We could start to see this kind of thing and then break. If it makes a break back into the range there, then obviously that turns it into a short at that point. So obviously looking for continuation breakout to new highs low at this point. Right, that's the weekly. So another one with a stage 2 breakout attempt from a big stage 3 range. It's attempted to break down into stage 4 multiple times here. Did break down for a few weeks or so, but then failed and came back in again. So just consider that a failed stage 4 breakdown as a shakeout. So again, that's combining some of the Wyckoff and the Weinstein terminology. So when you have a failed stage 4 breakdown, it's potentially just a shakeout move, which can form as a spring and a test and then follow through. So you can see in here we've obviously broken back up through some levels. We've broken this mini structure within the broader range as well, and then moved out to new highs here. So again, if I drop down to the daily time frame on this, you might be able to see it a little bit more clearly here. Maybe not. It's a little bit of a jaggedy one. Let's zoom out a little bit because it's a bigger base. There we go. That's the better range. So you can see the structure on this one. Got the early structure here, early selling climax, automatic rally, secondary tests, some up thrusting in here, then shakeout move, obviously the failed stage 4 breakdown, this area down here, then started to form up some higher lows and then started to break. So you can see the progression as it started to break out, obviously the breakout move. So we now want to see this hold within this range up here, ideally, obviously continue to show strength initially. So before coming back in, as I said, then obviously making a continuation breakout to new highs. So that is AGCO. ALTO, so again, another stage 2 breakout attempt on more than average volume here, potentially 2 times average volume. I haven't done the exact maths on it there, but you can see the volume has been expanding for the last few weeks there. So I might need to zoom in on this one a bit. So obviously we've got that big range to look at, or even more. So you can see the breakout move here from the base structure. Actually, the daily chart, I'll probably do this better. And again, give me longer. What we got? So you can see the lower structure in here that is broken out of, obviously meeting resistance at the top of the range here. So we want to see it tighten up. If it obviously continues at resistance here, you'd want to see it tighten up and hold within this area before obviously moving off to new highs. Ideally VCP type move, tightening up action, but you don't always get that. But that was what I'd be looking for on that one. So obviously it's in an area of resistance, but attempting to make an early stage 2 breakout attempt. Another one, SWN, with a big stage 2 breakout move this week, 28.6% on strong relative volume there, so potentially more than 2 times average volume, relative strength moving to new highs. So out of a big stage 3 range here. So the range has been going on for 42 weeks, so 3/4 of a year there almost, also. So stage 2 breakout to new highs. Again, drop down to the daily chart here. You can see short term we are extended at the +3 ATR level here. So be expecting some consolidation or pull back into here. This is a significant bar. So ideally we wouldn't want to see this bar undercut. So be looking for consolidation to come back into the range and ideally not get back into the range here. So you want to see ideally hold in the upper part of the range to show some strength, or even higher. Continue to follow through before pulling back. So that is SWN. CEIX, so this one's been highlighted again on the watch list multiple times in the last few months, as obviously the coal group has been one of the leading groups overall. So as we see with a lot of stage 3 ranges, for those that are CanSlim fans, generally when you see a stage 3 base that's forming as a cup and handle type pattern, then obviously they can be quite big. So a lot of people look for cup and handle patterns on daily charts, but obviously I'm pretty sure Bill O'Neill used weekly charts. So the cup and handle patterns you should be looking for are on the weekly charts, in my opinion. So this is because they obviously give you much better odds of a bigger move as well. So you can see on this one, we've had this big cup and handle breakout, 21 weeks there before the cup and handle breakout on that point there. Obviously we've now made a stage 2 continuation breakout to new highs as well. So this was highlighted all throughout this area here in the watch list. So it's been done multiple times. So if we zoom in on the daily, it's a little bit short term extended. Again, if we get the ATR candles on here, see we're touching the 3 ATR level here. So we'd want to see it come back into around the 21-day moving average potentially. So which is here. So, and ideally not obviously drop back into the range. So be looking for obviously either some consolidation in here or for it to hold and move back out from that kind of area there. So let's get back to that. And MVGS, so this is there was a bunch in the marine transportation group this week, so it's been a strong area where we've had one of our potential true market leader stocks, which is ZIM, which has been leading for a while. So been in a really strong stage 2 for a long while. So we'll just quickly get that one up. See that, which potentially having a buying climax in the near term here, so might be topping out. If we go back onto this one, we've got multiple other stocks in the group now starting to move out into stage 2 as well. Again, short term, we're a little bit short term extended as they're hitting their +3 ATR levels. Obviously, really strong groups can run at the 3 ATR level for a while, but a lot of the time, as you can see, other touches of the 3 ATR level, it tends to be a short term point for consolidation because the stock has got a little bit extended. So you're then looking for your 21-day moving average. Not that one. You're looking for the 21-day moving average to catch up a bit. So you like to see it obviously consolidate and pull back in potentially. So in this kind of area. Go back to the weekly on this one. So this one's a new stage 2 breakout to new highs here, coming out of a big range. Similar on SMHI. I think this was the biggest mover on the week in the marine transportation group. So 41% stage 2 breakout here. Volume is pretty light, to be fair, 391. So it's really small volume on this one. So not my favourite by a long way, but it is moving out into early stage 2 here. And FLNG, this one has been showing some big volume during this period here. So it's been in a big stage 2 advance. So since back around this area here, so breakout stage 2, it's been 360+% moved into potential stage 3 range. So 38% pullback here. So this is this point here potentially started to move into a stage 3, but making a stage 2 continuation breakout and strong relative volume. And you can see the relative strength line here has moved off to new highs as well at the same time. So that one is looking interesting as well in the group. You can see obviously the daily chart here breaking out again out of that 3 ATR channel on strong relative volume. So potentially a little bit near-term extended here. So be looking for consolidation or a pullback to obviously start to shape up a little bit on this one before obviously then moving back up to the upside. Okay, let's move on to this weekend's watch list stocks in the final part of the video. So let's show these on Friday. We'll do it based on the industry groups. Just want to look through the individual groups first. So let me just pause there. Okay, so what I wanted to talk about in this is highlighted the GL. This is the weekend watch list stocks. So as with the watch list, for those obviously watching this for the first time, the watch list is not a buy list. It's stocks run through multiple different scans. So we're generally looking for moves before breakouts, or if obviously moves that are starting to develop base structures. But if a stock has already broken out, already in the strong stage 2, then I'm looking for obviously consolidations and obviously basing moves, shorter term basing moves to happen in order to set up for new entry points to form. So the majority of these, I'm not suggesting that they're actionable, I'm just suggesting that they're making interesting moves, and we're starting to get towards actionable points on some of them. Some will potentially be actionable, but I'll leave that to you to decide on that. Obviously, we're looking at this from a stage analysis perspective, and obviously using some Wyckoff techniques as well. So one of the big features of the watch list is obviously looking by doing the watch list scans each day and culling it down to the final stocks. We find the groups that are obviously in focus and of interest. So last week we've had a bunch of groups starting to pop up. The semiconductors, in the last few weeks have been an area that started to pop up in the watchlist scans a lot. Some of the software names have started to come back in again. But generally for the last month or so, the top 10 RS stocks have been dominating the watch list. So groups, so for example, the coal names, exploration, production, integrated oil and gas, oil equipment and services, marine transportation, some specialty chemicals, for example. So they continue to show up. We had defense names, and I think even we've had a few other areas start to come back in as well. Renewable energy has started to perk up, but again, it's quite early in its base structure. So I've been highlighting those stocks as they started to move into the early parts of new basing structures. So they're only in phase A or phase B of their potential new bases. So they're still too early. But some of the semiconductors, on the other hand, they have run quite strongly. The group has moved up dramatically in the RS table over the last month. So that's an area of interest in the near term. So again, today, what's strong? Lots of exploration stocks again, lots of oil equipment and services. As I was shown before, they had 3 stage 2 moves in marine transportation. So FLNG I just showed, GNKs and GOGL have shown up multiple times in the last month as well, as is SFL. So just quickly show a couple of these. So you can see the type of moves these are making. So out of its base structure down here. So we've got this obviously breakout move, continuation. So looking for this we've got a near term buying climax and automatic reaction. So looking for a continuation break to new highs on this one for the trend to continue. It's look at it from a weekly perspective. You can see it's quite early in stage 2 here. So you've got obviously your sort of base structure here and the move out. So it's in early stage 2. So just looking for continuation move to new highs in this one. So for a continuation on. GOGL, it's another one of interest. So again, if we look at this from structurally point of view, you've got this tightening action going on here. So if I drop into the intraday chart, you can see, like we were showing earlier with the gold stocks, similar kind of move here. We've had the big stage 2 advance on the intraday, and we've started to make this stage 3 kind of structure here, which obviously it's been tightening up at the top of the range here. We've got potential little bit of VCP going on here, tightening up into the end of the range. So looking for this one to make a continuation breakout to new highs, and you want to see big volume on that kind of move. If it does, obviously if it breaks out on weak volume, if you only get a average volume bar like this, and you get a breakout move like that, then that's very suspect. You want to see the volume matching what's going on in the bar. So you want a big price bar and you want a big volume bar. You want the volume bar to be obviously at least 2 times the average volume. So, but ideally much bigger. So always look for that on the breakout in the method. We want to see more than 2 times the average volume. So if the average volume here is 600,000, we're looking for around this kind of level here of volume, at least at a minimum. But it's quite easy to see that you don't need to calculate anything. Just look at the previous bars. If it's not much bigger than the previous bars like you're seeing here, then obviously that's a little bit more suspect. So, and we want the breakout to have a lot of participation in order for it to have momentum and for it to run. So if it doesn't have momentum, then you get much more chance of it turning into an up thrust and obviously rolling over, coming back into the range and then breaking down, which obviously then turns it into a short at that point. So GNK just continuing to be strong here in the marine transportation group. So we've got this big sort of cup pattern, like W bottom here. So you can see making a stage 2 continuation breakout to new highs here on strong relative volume and RS at new highs. So again, on the intraday, if we go to the free ATR candles, it's a little bit extended. It's hit that free ATR level and it's consolidating. So it is running up that free ATR level, but I'd want to see it obviously continue to hold above this 21-day moving average. So any kind of pullbacks, you'd want to see it respect this level before obviously moving off and up to the upside again. If it starts to do the opposite to that, you start to see it break down, then obviously you're then out at that point. So what else is interesting on today's? I think Tesla wanted to talk about. So this one, we had this declining channel. I think I talked about it on the midweek video for you, but we've had this declining channel, so distribution channel underneath the 200-day moving average, but then has formed up some spring type action at the 200-day moving average here in the test, and it started to follow through around this point here. So started to move up and out of the range here. So looking for this to continue to hold up, maybe tighten up, obviously break to the upside there, that kind of thing. But obviously if it does start to, again, if it starts to fall over, we start to pull back into the range here, and it can't, then falls underneath its moving averages again here, so, and then can't get back up, then that would be very ominous at that point. You'd be obviously looking for, you have a few potential short entry points there at that point. So at the moment it's looking more promising low, so we're looking for this to move back into stage 2, but continues to be in a stage 3 range at the moment. Let me go back to the candle charts. Is there anything else I wanted to talk about specifically? We talked about HPQ. LNTH is a difficult one at the moment. So this come from the Shakeout plus free scan. So quickly get the point and figure chart on this one so you can see what the Shakeout plus free scan does. So potentially, so when you get the first breakdown below the bottom of a range or just a spring type action, then pull back in, is what this scan, the Shakeout plus free scan, gets. So it's showing a shakeout move and then a recovery back into the range. But as you can see from the price action here, 49.9, it didn't close back up at this point here. So although that's a potential buy, if it did close near the high there, it's rolled back over again and closed down on the day. So if we go back to the daily chart of this one, we've got this big bar here on heavy volume, but obviously it held the 21-day moving average, and that heavy volume could potentially be the buying action as well coming in at the bottom of the range here. So a little bit of a demand tail on this. Obviously, like I said, on Friday, had the rebound move back up, but then it closed down on the day. So if we drop down onto the intraday, you can see the point of control here. So we've got this sort of volume point of control level around here, which it's kind of sitting at the moment. So, and then our obviously structure, it's just kind of sitting in. So looking for this to hold, make a higher low here, and start to break back above near-term pivots and get back above the moving average. So if we can do that, then potentially up and out. But again, you would want to see, if it does start to break up again, we want to see some bigger volume or increasing volume as it starts to break up. And then on any kind of pullback, you want to see contracting volume before then breaking out again. So on the upside. So that's LNTH. What else did we want to look at? Then another big one to potentially look at is Amazon starting to form up. You can see started to break the downtrend it's been in. So it's been, you see the plus 1 ATR level here. It hasn't managed to close above that until the last week or so, but it's managed, for the last week, it's managed to get above that. So it's just underneath this 200-day moving average now. So this 200-day moving average, we need to see this start to overcome it and start to respect it. We need to see the 21-day moving average start to get above that as well, and the 50-day moving average. So if it does start to respect those, then potentially that one could be good. So that's another area I'm looking at. Anything else I particularly wanted to highlight? Let me just run through the scans. ALLG is a new one, so just looking at that from on the intraday really at the moment. So we drop down to the 1 hour time frame. You can see starting to form up in here, some bigger bars. So even down to the 30-minute here. See the tight action that was forming on here and starting to break to the upside again there. So a little bit more of a difficult one, that one. So you see it's near term. Auto, we already talked about. AMR, so you can see the tightening action on this one. So again, drop down to your intraday chart. You can see here we've got a little bit of VCP type move going on. You see the declining volume, so we're looking for obviously a strong break to the upside. You'd want to see expanding volume on any kind of break there. To list. So ASOL. This is potentially the strongest of the semiconductors at the moment. I think this is potentially the strongest tech stock at the moment. They're 98.6. I think this is number one of all 900 plus in the technology sector at the moment. So you can see it's broken out of this base structure that it's been in. So had a big change of behavior here, pull back and been going sideways. So starting to break to the upside of the range and managed to hold on Friday. So this is one of the semiconductor stocks. So looking for this to continue to hold in this upper range here. You can see the significant bar here. So this bar is this bar. So we want to see this bar hold in terms of resistance. So any kind of stop for me would be below this level here. So under here, you want to see the how do I do that? You want to see that. See the 21-day continue to rise here. So we might need to go sideways in this for a little bit, but at the moment you can see the contracting volume here. So if it does make a sort of fish hook type move and start to break to the upside, then we'd want to see obviously increasing volume here. So you want to see that volume bar start to pick up again on any kind of obviously break to new highs. But if it does come in, we want to see it form up in this kind of area here and respect this 21-day moving average, and ideally obviously these levels at the moment it's respecting this initial level here. So we got the 64 level. So but obviously we could come all the way down to the 60 level there potentially. So again, you come down to 60, you got about 8 or 9% on the downside there. So you'd want to see it respect that. So if we drop down to the 2-hour time frame on this one, you can see it's just starting to tighten up in here. So it could make a sort of flag type move here. So again, we look for what we've had here. So we've had a 50% move, and at the moment we've only had a 10% pullback. So only a fifth at the moment. So got a little bit of VCP type action going on in here. So it might need to form up a little bit more, but then we're looking for obviously a break to the upside. Again, you want to be seeing some, if it does break to the upside there, you want to be seeing some strong relative volume on the break. Okie dokie. I think that will do for today. So as we're just going over the hour now. So obviously, thank you for watching. So this is the part 2 of the Stage Analysis Members Weekend video. So for anybody watching that's not a member, so I'm going to post this one on YouTube as well this weekend. Obviously, thanks for watching all the way through. I appreciate it a little bit long, but this is how I like to do it. So if this is what you're looking for, and in your each week, I do videos like this each weekend, and obviously cover the markets and the market breadth and the industry groups in detail as well. So, and I do a midweek video as well. So come and join us at stageanalysis.net. But otherwise, I will see you on the next one.